The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to CPA Academy. My name is Christopher, and I am so happy to welcome you into today's webinar on how a manual AP process impacts cash forecasting visibility and the financial close. Our presenter today is the one and only Chris Doxey, and before we get started, I want to go through some housekeeping items and do some technical checks to make sure everything is working. First, if you don't mind, find the GoToWebinar control panel. This is located on the right-hand side of your screen. Find that drop-down labeled questions. If you could, open it up and drop me a note letting me know you can hear the sound of my voice. You can see the slides that Chris has up on the screen. And as always, let us know where you're listening in from. All right, I'm seeing those responses come in right now. Thank you so much for taking time out of your busy day to learn something new with us here at cpaacademy.org. This is going to be a fantastic presentation that I'm sure you're going to have a lot of takeaways from. And so if you have any technical trouble throughout today's presentation, let me know in this same panel, and I will do my best to get around to you as quickly as I can. And if you have any questions for Chris, you can put them right here as well. Now, if we're not able to get to your questions, because we do have a lot of content to get through, don't worry, because we will be able to provide those to Chris in a report following today's presentation. But now that we know things are working, let's talk about our credit. This is a 1-hour webinar and qualifies for 1 CPE credit. The way you earn that credit, as always, is straightforward. Just stay logged in for 50 minutes of our allotted time and answer the poll questions. Today, we'll have a total of 4 polls during our webinar, and in order to earn full credit, you'll need to answer at least 3 of those polls. Your CPE will be issued by the end of the day today. It'll be available in your CPA Academy account. I also want to let you know we are recording today's webinar, and the archived recording will be made available to you by the end of the day as well. Last but not least, take a moment to visit the handout section of your control panel. This is at the very bottom, and there you'll find a PDF to download and follow along with today's presentation. If for any reason you're unable to access that PDF, it's also available in your CPA Academy My Account page as well. And with that, we are all set, so I am going to take a step back and hand everything over to our presenter. Chris, the floor is all yours.
Okay, great. Hello, everyone. I'm glad to be here with you again today. And our topic is how a manual AP process impacts cash forecasting, visibility, and the financial close. And this webinar is sponsored by Tipalti, which we'll talk about in a couple minutes here. The learning objectives for today's webinar is take a look at the true value of an automated AP process from cash management to the close, identify other challenges that AP automation can address within finance operations, and we've got a type of an ROI calculator for you to take a look at. Call it the time savings calculator. And this is something to put in your toolkit when you're looking at calculating the true value of an automated AP process. And as mentioned, today's webinar is sponsored by Tipalti. And Tipalti comes actually from a Hebrew expression for "we handled it," which is totally true. It's the only company handling both accounts payable and mass pay for mid-market companies across the entire end-to-end cycle, and also focuses on funding global entities, onboarding the global supply chain, and streamlining invoice workflows and reconciling data. Tipalti customers typically reduce operational workload by 80% and help to accelerate the financial close by 25%, while strengthening internal controls and spend visibility. So doing a lot of really cool things at Tipalti. And if we look at our agenda, we'll define the end-to-end financial close process flow and determine the AP bottlenecks within your close process, look at the impact of AP automation, and establish accountability, which is where we'll take a peek at metrics and KPIs, key performance indicators is what KPI stands for. And then we'll take a look at the time savings calculator that I mentioned in our learning objectives. All right, so the end-to-end financial closing process flow can be somewhat daunting, but here's a simple way of looking at it. And it starts with the transaction accumulation, reconciliation, and subledger close, and moves to the corporate close and consolidation, where we're closing out the business units and the completion of the adjusted trial balance is done. And we take a look at the first pass of consolidated financial statements and that is part B. And part C is the final mile, and that's where we're looking at the analysis and reporting cycle for our companies. This is another look at the detail, and the inputs are to capture the data, the ongoing transactions that we're looking at, and the processes that are mostly included in the closing entity are ledger close and consolidation, and then reporting, where we have both internal as well as external reporting to consider. And a lot of this complexity is certainly going to be driven by the automation, not only of your AP process in the transaction accumulation stage, but also if you've done any automation in your closing process. All right, I just put up a little picture that we're going to spend some time talking about, and this is what a manual accounts payable process looks like. And you can certainly see with that sort of a small view of all the steps along the way, that's certainly going to impact the closing process as we look at all the complexities there. And then if we take a look at the bottlenecks within our financial close, here's a different view of that process flow, but this is going to tell you what a manual AP process looks like. And that's where we start with a supplier generating an invoice, and those are coming in usually with some sort of a manual fashion if you're not automated. So postal mail, PDF files, spreadsheets, and sent via email as attachments, XML, and in some cases EDI is used. And then we take a look at how we process all that manual invoice data that's coming in. If it's postal mail, they're usually sent to the mailroom or to the business process owner, scanned. There's manual typing, because guess what? All that has to be keyed in, particularly if it's totally manual. You've got to look at the correct coding for your accounting system, the correct general ledger codes. And I always ask my clients when we're talking about automation if they have an automated process. And a few years back, one of my clients said, yep, we're automated. Those invoices are sent via PDF or Excel spreadsheets, and they're coming in email. Well, yeah, they're not sent through the US mail. However, someone still needs to type in and key in and code in all that information. So what happens? A lot of times we're missing and we have inaccurate information. We've got to do manual validation, take a look at what this invoice is for, determine that there is a PO open for it, and there's a lot of investigation that takes place. And then for the approval process, we've got to go through the matching, in-person approval in some cases where we don't have automated workflow. If their matching doesn't take place, there's some investigation that needs to happen at that level. And what we're really looking for is, in a manual 2- or 3-way match process, is ensuring that that invoice is matching the receiving information and the PO. Once the matching is confirmed, we can move on to payment, and that is when all the approvals are completed, the coding is correct, and the matching is complete. And the challenge here is, how do we get to an audit trail? And of course, there are many steps along the way. Many companies are scanning in information, as we can see, but it may not be enough to really get to the true audit trail to verify an invoice, a payment, and that match back to a PO or to a contract. All right, we have our first polling question coming up, and we are going to have 4 of these polling questions. And the poll is open, and the question is, does your AP process impact the time and accuracy of your financial close? Are they a culprit somewhere and a bottleneck for your closing process? So the selection of answers is yes, no, or not sure. Those responses are coming in. Thanks for responding so quickly. We're at about 93% right now. And you can see with that chart that we just looked at, with all the cumbersome process, that's certainly going to be impacting the timing and accuracy of the close. Okay, and 61% have answered yes, 17% no, so that's great, it must be fully automated, and 23% not sure. So thanks again for answering that first polling question, and as mentioned, there'll be 3 more to answer. All right, we'll get into the pain points and bottlenecks within the AP process. And I have 10 common ones, and there are usually quite a bit more, but just to focus on the 10 top ones. And the first one is manual invoices are not received, approved, or processed in the same fiscal month. AP resembles a fire drill during the monthly close process, which means that accruals are inaccurate or even duplicated. Cash accounting is tasked with reconciliation issues requiring AP resources. Critical AP reports are usually created in spreadsheets and are prone to errors, and there's a limited capability or ability to report any sort of metrics for the AP process. There are disparate and disconnected procurement and financial systems, and there are last-minute requests for supplier payments with manual checks. And that usually adds to the fire drill environment, and of course, we're going to see errors. So there's no time to review the supplier master for duplicate records and data accuracy. And multiple non-standard or overly complex charts of accounts, the basic bones of the accounting system are in place. So when we talk about coding those invoices to the correct account, to the correct cost center, it's sometimes driven by the complexity of those non-standard and complex bits of charts of accounts that are creating problems. And we're going to kind of go back and forth between AP and the financial close. So if we look at 6 common pain points for the close, we have multiple general ledgers, a lack of visibility to the status and execution of the closing process. And what that means is we never know where we are. And there needs to be very strong communication during the close so we know what needs to happen. And a lot of the closing process is driven by some sort of a checklist, and organizations that don't have that may be always hindered by trying to figure out where they are in the process. Third one is there's limited reporting capabilities, and we have so many spreadsheets. What would we do without our spreadsheets? And they're also used to support multiple manipulations of the same data over and over again to meet various reporting requirements. There's a lack of focus on the process basics, such as checklists, which I mentioned, a standard reporting template, standard operating procedures, and business continuity plans. And number 6 is there's an absence of staffing and training plans, and that's creating a resource gap during each closing cycle. And again, being in finance my entire career, it's interesting that you couldn't take vacation during a fiscal close period. And, God forbid, if anything happened where you had to be out, it was just very, very difficult. All right, so what are the bottlenecks in the closing process? Sometimes financial documents and spreadsheets are created and stored on individual computers within and outside of finance, and that results in way too many surprises, lack of timely reporting, period and cutoff errors, lack of supporting documentation, lack of consistent processes, and excessive post-close adjustments. So you can see that if we look at the bottlenecks on both sides of the equation, that they're quite voluminous. Okay, what is the most cumbersome aspect of your financial close? And this is polling question 2. And the selections are validating AP accruals, the reconciliation process, which is, again, pretty general, but it is an aspect to take a look at. Pre and post-close adjustments are not sure. Looks like as the answers are coming in, we're pretty much split across all 4 selections, which is interesting. Okay, we're on polling question 2, and we've got 2 more to go. And thank you very much for your answers as they're coming in. Okay, and it looks like the winner is the reconciliation process at 29%, and 26% pre and post close adjustments. 23% aren't sure where their bottlenecks are, the most cumbersome aspect is, and 22% validating AP accruals. So again, thanks for your participation in that polling question, and as mentioned, there'll be 2 more to come throughout the presentation today. All right, so we talk about the pain points for accounts payable. We talk about the bottlenecks and pain points for the financial close. So what does automation do to alleviate some of these pain points? And if we take a look at the key components of an automation initiative, it's a transformation philosophy, and it actually entails a new strategic vision of a brand new AP process. It should be a proactive rather than a reactive approach to adopting the technology. And it's a focus on people, process, and technology. And we'll come back to that key point as we go through the remainder of the slides. And what that really means is we're not just implementing technology for technology's sake. We're thinking about what that means to our people, to our processes, and hopefully some very positive impacts on both of those. All right, so if we take a step back and think about what are the foundational elements of the AP process, and we're looking at the supplier master, and next comes the invoice processing area that we're talking about as far as invoice automation and payment. And payment automation is still lagging behind. A lot of companies have moved to paying their suppliers with ACH payments. Some are paying suppliers with a procurement card or a P card. That's going to garner some rebates back to your company. And the benefit of automating payments is to alleviate checks and all the achievement and reconciliation processes that go with the cash management side of it, as well as the reconciliation of accounts. The point here is there are 3 critical corporate controls, which automation certainly supports. The first one is segregation of duties, second one is system access, and the third one is delegation of authority. That's your approval process that hopefully can move to an automated workflow type of cycle. Here's the procure to pay process, and this is really shown to show you how accounts payable fits into the P2P side of things and the relationships between procurement, receiving, as well as accounts payable. And the foundational elements of this process are internal controls, compliance, ERP solutions, and of course, P2P automation solutions, which include AP automation as well. All right, and we talked about defining AP automation and how some organizations and some professionals, some accountants don't really have a consistent definition of what AP automation is all about. It's really the technology that is used to streamline and automate AP processes, which includes removing manual tasks and providing better visibility and control over important financial data, again, in a timely manner. AP automation reduces costs with an intelligent acquisition process as every invoice is automatically captured and coded and data is extracted from any format. And many companies think about, well, gee, AP automation equals touchless. Yep, it moves you a lot closer to being in a touchless environment, and it certainly gets rid of that very complex process flow that we looked at a few slides ago. Okay, there are 4 pillars to support this touchless processing concept. And the 4 pillars are starting with end users. And from a requisition perspective, end users really just want to buy and get what's needed to support either their process or their organization, whether it's consulting services or any sort of raw material for a manufacturing environment. Buyers, which is the procurement department, are looking at finalizing terms and conditions with qualified and vetted suppliers. And they're usually responsible for analyzing company spend and looking for opportunities for strategic sourcing as well as spend reduction. Next, we have our suppliers, and they're responsible for providing the contracted goods and services and submitting invoices, hopefully in electronic format. And then finance or accounts payable receives, matches, and pays the invoice and has the opportunity with the correct data to report total company spend. And again, with some of the automation solutions that are out there, spend can be broken down by key suppliers, strategic suppliers, and by organizations, business unit, what have you. All right, so what is the endpoint? And again, we're alleviating a very complex manual AP process or moving that closer to touchless. And we're focusing on people, process, and technology. And a lot of this is going to be driven by a overarching company strategy for moving towards digitizing and transforming processes across finance. And with people, we're going to be providing opportunities for new core competencies where accounts payable will be moving towards a role of an analyst, more from moving from a processor again to an analyst where they can spend more time looking at process improvements as well as data. And what technology is really all about is defining your business case to support and alleviate your biggest pain point and matching technology with the strategy. But some of the key points here are one solution doesn't fit all. And what we're really looking at is getting to that one source of the truth with timely and accurate data. And again, having a company-wide philosophy that automation and transformation is really the way to go across the board. So what are the 10 benefits of accounts payable automation? Payment accuracy is one of the top ones. Early payment discounts, improved internal controls, and the reduced risk of fraud. And as many of you know, we're never really going to get to a perfect world where fraud would be completely alleviated, but we're looking at reducing the risk of fraud. It's risk mitigation and reduction, accurate supplier spend data, and getting to a timely and accurate financial close. Liabilities, of course, will be accurately stated, accurate cash forecasting and management, and new efficiencies and the AP process will allow the individuals in the department to spend more time on analytics, improve customer service and supplier relationships. And we think about our customer relationships, certainly something we want to garner, but we also have to think about our supplier relationships. What would happen if we damaged supplier relationships with those strategic companies? And then the last one is improvements in working capital. If we're getting in those early payment discounts, we're reducing the cost to process an invoice. We're seeing improvements in working capital across the board. So what's the accountability factor? And we're going to take a look at two different sets of metrics. With financial close metrics, what we usually track when we're going through the financial close is the closing time. It's all about the cycle time it takes to close. And certainly with some of the automation we're talking about, we're going to have opportunities to reduce the days to close. Many companies have a benchmark, and that's really going to depend upon the size of the company and the level of automation. The next metric that we take a look at are number of reclass and correcting entries. And then we start seeing, okay, what's the percentage of improvements and reclass correcting entries from the prior period? So it's not just taking a look at metrics in a vacuum. We're doing some trend analysis to look at what happened in the prior period. And that's kind of a common mistake that a lot of companies make when they're implementing metrics. They just look at pretty much metrics in a silo, kind of a view, and they don't go back and look at what happened in prior periods. Number of automatic journal entries versus manual. and how you've improved in those automated journal entries from the prior period, number of manual account reconciliations, and of course the last one is the percentage of improvement in manual reconciliations from prior end. And we can add things to this list like variance improvement, again, time to complete reconciliation, and it can be a very lengthy list, but those are some of the ones that a lot of companies are taking a look at. If we look at moving to establishing that accountability for closing tasks and closing schedules, many companies implement a checklist indicating plus or minus days from the period end to complete the tasks. And to establish that clear accountability, you've got to have a checklist, and guess what? That's going to be communicated. And here's some suggested checklists to consider. Financial close checklist, which is sort of a generic one, executive level checklist, disclosure checklist, GL journal entry checklist, financial close consolidation checklist, quarter end closing and year end closing checklists are also something to consider. And many companies that are following best practices have these types of templates or checklists in place, and those are speeding up the close. All right, and we have polling question 3, which is, are you currently tracking any metrics for your closing process? And the answers are yes, we track 5 to 10 KPIs on a monthly basis and analyze the results. No, we don't track any KPIs at this time. And number C, our metrics program is currently under development, and D is not sure. All right, so let's take a look at how those answers are coming in. Okay, we're at 90% voted. Just need to have a few more of your answers. Okay, and the results are in. 21% are tracking metrics, 35% no, we don't track any KPIs at this time for the closing process, and 13% you're developing metrics, and 30% not sure. So thank you very much for answering that question, and we will have one more polling question before the end of today's webinar. All right, if we take a look at what are some metrics for the AP process to take a look at, and this is related again to the financial close as well as the overall performance of AP. And we have 8 that are considered best practices. The first one is days payable outstanding. The second one is percentage of balances over 90 days, percentage of unbilled payables, value of duplicate payments identified, value of duplicate payments resolved. Number 6 are types and frequencies of errors found during the reconciliation process. Number 7, percentage of or number of manual adjustments applied. And one that a lot of companies are starting to track and really pay attention to are the number of queries received and closed and those would be supplier inquiries for the AP process. And many look at that support as a customer service type of process, and we want to make sure that any supplier inquiries are closed within a specific number of days. So those are the 8 financial metrics to consider for your AP process. All right, now we've got some interesting bits of information, and these are scorecards for your AP process, and they're broken out by some of the key processes that we talked about. And if we start with the supplier master, a driver within the AP process, as we talked about, is the supplier master. And we want to take a look at those active suppliers and the inactive ones. And those are usually suppliers that have not been used within 18 months. And we usually don't use 12 months because there could be a billing after 12 months. So we want to make sure we capture and identify those inactive suppliers correctly. Percentage or number of strategic suppliers, diversity suppliers, percentage of one-time suppliers, which could flag an issue or a process weakness, percentage of suppliers paid with P cards, which means procurement card, suppliers paid with ACH, electronic payments, and percentage of suppliers using ACH remittance rather than a manual remittance, PO versus non-PO suppliers, and the suppliers that we're obtaining W-9s from, and suppliers that we're performing TIN matching with. And that is the IRS service where we can match a TIN number against IRS records. Suppliers accepted e-invoicing as a percentage of total suppliers. Now, if we look at invoice processing, and we'll see some of this when we get to the time savings calculator, we look at cost per invoice, cost per line item, percentage of invoice to PO matches, invoices paid within terms, early, invoices paid early, cycle time to process an invoice. And many companies forget to take a look at any outstanding credit balances, which is an important aspect to look at, particularly during your monthly reconciliation process. Percentage of invoices received electronically, percentages of invoices received manually, and discounts earned or missed, I should say, in local currency, and days payable outstanding. Next, if we take a look at disbursements, and again, this would be one that should be diminishing if we do comparison from month to month, and that's the number of impact of checks issued in local currency, ACH payments, P card payments, wire transfers, percentage of manual checks, which really should be considered emergency payments as you're moving to an automated environment that we're talking about. And if we're paying our suppliers with P cards or procurement cards, that would be the rebate that you'd want to track, and it's usually collected on a monthly, quarterly, or annual basis. Number of positive payee issues tracked, number and percentage of payments fraud issues reported. And another category that we have a few metrics on for you in this scorecard approach is supplier spend analysis, spend by key suppliers over time, payment processing analytics, strategic sourcing analysis, productivity analysis, which is usually by process and associate, activity-based costing analysis, analysis by payment type, which would be as indicated in a disbursement portion of the scorecard, check, electronic payment, P card and wires, reduction in errors after the implementation of automation, FTE stands for full-time equivalent and headcount reporting. And then the last one in this category is cost center and budget analysis. Okay, looking at account reconciliations, number of issues, impacts to the record to report process or the financial close, accrual issues, clearing account issues, reconciliations completed on time, manual JEs versus automated journal entries, automated accruals versus manual accruals, and number of closing or post-closing issues, and aging of clearing account variances. And I mentioned clearing account because typically within the AP process, there will be a clearing account, which is the result of open POs or unmatched POs and invoices. And it's an account that really needs to be reconciled on a monthly basis. And that variance can become quite large if you're not doing so and accounting for all those variances. With internal controls, we look at the number of controls reviewed quarterly, control deficiencies identified, number of disclosure items, number of significant or material control weakness, and those last two are looking at SOX 302 and SOX 404, number of outstanding remediation issues, impact of duplicate or erroneous payments, impact of fraud issues, number of compliance and regulatory issues, and number of internal control self-audits completed, and any outstanding TIN matching, tax identification number matching issues that need to be addressed. Okay, and the last one we mentioned a little bit is the customer service aspect of accounts payable. And we usually take a look at the number of supplier inquiries per quarter, internal and external, because sometimes suppliers may report an issue through procurement and may not use any sort of supplier portal, or they may not call, they'll just work directly with their buyer. Reasons for the supplier inquiry: late payment, erroneous payment, duplicate payment, the types of inquiry, and this is the mechanism where those inquiries are coming in, average time to resolution versus goal time, number of self-service inquiries if people are using or suppliers are using the supplier portal, number of escalated supplier issues, and the last but not least, number of issues requiring additional research. All right, so we asked about your metrics for your financial close. And now our last question is asking about, are you currently tracking any metrics for your accounts payable process? Remember, we asked about metrics for our financial close in the last polling question. This one is asking about your AP process. And we track 5 to 10 KPIs. We don't track any. And our metrics program is currently in development. And the last selection for you, our way to answer the question is not sure. Okay, those results are in, and 15% are tracking metrics and accounts payable, 36% nope, and 14% under development, 35% not sure. So thank you for those answers. It looks like we've got a ways to go as far as implementing metrics and accounts payable. And hopefully the ones that we went through with some of the examples and scorecards will give you some ideas. All right, now we're going to talk about the time savings calculator. And this is really a way to look at what automation can bring to your accounts payable process. And we're not looking at dollars, which can certainly be another aspect of this calculator, but we're looking at how many days could possibly be saved a year. And this is all fictitious data. And the inputs would be number of invoices processed per year, number of AP associates dedicated to invoice processing, hours spent obtaining approvals, and you can see how this is calculating. We also have the last section, or part 2, is on analysis, remediation, and reporting, and we take into consideration any remediation activities that could be the result of a manual process. We're also looking at ways to track metrics and how those can be improved with automation. And if we go and input all the data, we can determine, and again, this is all fictitious data just for test purposes and just for informational and educational purposes. We're looking at, in this particular case with this company, saving 73 working days per year. And that's pretty significant. That's, certainly over a couple of months, but very indicative of how much time and money actually AP automation can save you as a company. All right. So we have more time than anticipated for questions. So hopefully we'll be able to get through all your questions and answer anything that may come up as we're doing that. All right, so let's see. Okay, one of the questions that came in is one of the major inputs and least automated functions for this is receiving. The question is, do I have a KPI for that? I don't off the top of my head, but yeah, receiving is certainly a manual effort. It's very difficult to automate that, but yep, that's something I can certainly get back to you on. And another question that came in, as far as checklists for closing, yes, there certainly is, and that's something we can make available to you. And we have all kinds of checklists that can be provided that can be very helpful, from that overall closing checklist to some of the more detailed ones we talked about. All right, so one of the questions is, you said it's dependent upon the industry and size of the company, but as far as typical time for month-end closing, I've seen anywhere from 3 days, I've seen 5 days to 6 days, and on the high side, anything over 10 days. And, you know, we talk about virtual closes, we talk about soft closes, and I think that as far as setting a goal, I've seen 4 to 5 days as kind of being the benchmark, and anything over that is somewhat somewhat cumbersome, and you know, again, something that might want to be addressed by automation or process improvements. Okay, and one of the next questions is, what are some benefits to invoice approvers with automation? Yeah, the benefit there is getting an invoice approved in a timely manner. And the way workflow approvals usually work is that's going to be tied to your delegation of authority or approval policy, which is usually a set of approvers with dollar amounts. And automating that policy with some sort of a workflow solution is really taking a look at those signature authorization tables. And what happens is, if you have an invoice or a PO for $10,000, it needs to go up to a vice president, it's automatically routed. And if it requires another set of approvals, then it would be automatically routed to that next level. And what happens is, if the approver isn't doing their approving within a timely manner, it would automatically get routed. And I've seen this used very, very well, because what we're doing is we're not chasing paper invoices to almost fictitiously put someone's approval signature on them or stamp. And the other thing that happens is, in some cases, a lot of approval processes are automatically delegated to an admin assistant or a lower level person in the company, and they're just you know, signing it. They're not really looking at any backup data or determining that the invoice and PO information is correct. So what we're doing is we're avoiding that rubber stamp process, and we're almost adding an additional benefit of improving internal controls by ensuring the right approvers are in place. So yeah, that's a really good question. All right. And we're talking about the next question: what are some benefits to invoice approvers with automation, and how much faster do these closes happen with automation that you discussed? Well, you know, again, I don't have any benchmarks on what happens with AP automation and close automation. It's really going to depend upon really two components. One is, how automated is your closing process and reconciliation process versus automation and accounts payable. Now, if you think about it, what we're doing is we're not keying in information, so we're not chasing errors. We won't have as many reconciliation and accrual problems. So these are factors that can be added. And one reason to actually go back and think about all the data that we talked about with metrics and KPIs, it's important to take a look at where you are today. And you can't really figure out where you need to go and where you can improve, or where you have improved, if you don't have a good benchmark of your KPIs and scorecard data. So I would suggest, you know, figuring out where are you closing today, what's your benchmark today, and what's your goal, and what do you need to do to get there. Okay, the next question is interesting. What if some people love paper and are not interested in automation unless it saves them time? And I will tell you that one of the biggest issues with invoice automation or AP automation is change management. We have people say that, well, gee, we've always done it this way. Why would we want to change? We love our paper. We like, that audit trail. We like being able to, go to a file cabinet and pull out information. Because don't forget, when we're talking about automation, we're talking about data storage and ease of audit and things like that. And, basically to start this journey of automation, it usually starts with, all right, do you have an opportunity to reduce costs and improve the efficiency of the AP process? And yeah, you do. And it really starts with creating that business case and getting individuals to understand that, yeah, I mean, this is not just automating for the sake of automating. It's going to help the overall process. So it is a difficult one, but change management is one of the biggest factors. And again, another point I just wanted to bring up with the pandemic. I was talking to someone on a webinar, pretty much maybe 6 months in. And they were all worried because they had to go into the office to pick up manual invoices and get them processed. And, again, if you think about it, the pandemic is something that is almost a good business case in itself for driving the need for automation. And this individual was talking about, yeah, if we were automated, I wouldn't have to, really risk my life to go into the office and get invoices processed. And so that's a very compelling impact. And as I said, is a very strong case for automation. And, sure enough, with that being said, she was able to make her business case and start automating invoice processing. So, again, very, very compelling and an unfortunate situation, but something that, we need to take a look at. All right. I'm going through some of the other answers and questions that are coming in. And yep, a lot of questions on the checklist. And if we think about some of the other questions or take a look at some of the questions here. So we talk about career enhancement, and the question is, can automation really provide career enhancement opportunities for my AP staff? And I love that question because I've seen a really big evolution of accounts payable moving from that corporate transaction processing back office kind of environment, almost being a stepchild, to having the ability to do analytics with real-time data. And because of automation, they're not chasing those approvals. They're not chasing those manual invoices. And the challenge there is, as we've moved from processor to almost in some cases an opportunity to save costs with either outsourcing or shared services, to being in a situation where there is more opportunity for analytics. And the challenge, we're talking about change management as well, is ensuring that the AP staff has those skills. So, again, a lot of training. It's not just using Excel, but it's being able to actually understand and data. Okay, another question that came in. Let's see. So the biggest challenges with automating the AP process, and we talked about this one quite a bit, but I'll just emphasize the question. The answer is that change management is certainly one of the big opportunities to address, and a lot of that is people are afraid of change. I mean, it's been a rough couple years, and with the understanding that automating the process is going to help them, help your staff spend more time on what's really important to the company. So, yep, that's one of the biggest challenges. It's change management. Okay, next we have, I hear that AP automation is a journey, so how do we get started? Well, that is a good question. And it's not just jumping in with both feet, and I'll give you couple of points as far as how to get started. One is understanding where you are today. And that's why we talked a lot today about accountability and metrics. It's understanding where you are so you can figure out where you want to be. Like, I will give you some benchmark data, and this is kind of interesting. We talk about, well, gee, why should I automate? There are three sources of data that I have, and one source of data is the IOFM. This is the Institute of Finance and Management, and we're looking at one metric, and that is cost per invoice. The IOFM says that their survey recipients responded to the cost per invoice is $1 to $21. That's quite a range. And the reason the cost per invoice was so low because of the level of automation. Next is the APQC, which is the American Productivity and Quality Center. And they're saying that their survey recipients responded with $2.07 to $10. And that is, again, going to be driven by the level of automation. The last one is just giving me one average, and that's Ardent Partners. They're saying that the average cost per invoice, just in general, without any level of automation, is going to be $11.57, which is pretty much in line with the rest of the data. So what we're looking at is an opportunity to save a tremendous amount of money as we're going through the automation process or the automation effort. And it starts with knowing what your cost is today. If you're in that, $12 to $21 range, then there are opportunities to reduce that. So understanding that and understanding where your biggest pain points are. E-invoicing is a great thing, but you might want to spend time on getting your suppliers paid with either a ACH payment or a purchasing card. And it's understanding, looking at all those process flows that we had for P2P, where in those silos do you have the biggest issue and what should be automated? So that's one thing to think about. Where are you today? Where do you want to automate? And that's having an understanding not only of your metrics, but of your process. Then you create a business case and you can use that ROI model that we talked about as well. Okay, so the next one is in line with the previous question. Should I be tracking some basic KPIs before I consider my automating my AP process, and why is this important? And that's to get a baseline. And as we talked about, we gave you a bunch of metrics and KPIs to select from, but I would take a look at what are the top ones to focus on. Maybe start with 5, then move to 10, but don't start with 20 and try to do them all. Another trick to focusing on metrics is to see if you can get the data in some sort of an automated fashion. And what I'm suggesting is we don't want to be creating spreadsheets and chasing data, because you'll end up spending a lot of time reconciliation. My experience with KPIs and metrics has been, if you create a report card and you're looking at trend analysis and the results, there's always going to be a question, well, what's the detail behind this? So one trick to consider, or one aspect to consider as you're developing your KPIs and metrics, is that you want to have the ability to drill down and provide detail if needed, because someone is along the way, believe you me, is going to ask the question, what's the detail behind this? Why is this metric higher or lower from one period to the other? And so again, have your baseline and have the ability to look at the detail. Okay, the last question that I see, I'll be taking a look to see if any more are coming in. How has automation helped many companies? And again, looking at my example where someone doesn't have to and process manual invoices, is one of the key benefits. We're able to reduce that manual effort and able to reduce risk. So if I look at AP automation and I look at improvements on internal controls, because we don't have people keying in data, focused on results. And what helps a lot is that the data accuracy is there. We don't have as many duplicate payments. And sometimes with a duplicate payment or erroneous payment to a supplier, those have to be identified with a self-audit tool or some sort of software. And what is difficult to do is get that payment back from a potential supplier. And I've worked at companies that do this sort of audits, and it's amazing what buyers have paid for more than once. We're talking things like machinery, MRI machines, and millions of dollars that can be paid more than once. And very key to think about, well, gee, could that have been avoided with an automated process? Yep, it sure could. And that's, money that's out the door and money that has to be collected. Okay, one question that's coming in is, what's the cost of converting to automated software? Well, that is a tough question. It's really going to be dependent upon volume and what sort of automation is being looked at. And, again, if you're looking at automation from end to end, again, we can't just throw a number out for you, but it would be something that Topolti can certainly follow up with you on. All right, any more questions coming in? I'll just take another look here. I think I've answered mostly all of you. And yep, so that's it. I don't have any other questions, and I'll send it back to you, Christopher.
All right, and with that, we're getting ready to wrap up today's webinar. Thank you so much for your attendance. We will be processing your credit later today, and that will be showing in your CPA Academy My Account page within 24 hours. Everyone will also have the opportunity for a full webinar evaluation, the links of which will be available in your CPA Academy account as well as your email. And I just want to say thanks again for a wonderful presentation, Chris. There was a lot of takeaways. We had a lot of questions from a really engaged audience. So thank you so much for that. We'll send you those questions in that report later today. And for all of you that joined us today, thank you for taking time out of your busy schedule. We hope to see you all on future webinars. Have a great rest of your day.